Hey everybody, welcome back to Chipstock Investor. Today we're going to focus on a company that I feel like I don't know a whole lot about, Ubiquiti.
I would say most do not. Before we get to Ubiquiti, though, we're actually going to use Ubiquiti to answer a question that we still get. We did a video on this almost a little over a year ago now. Why do some semiconductor companies report so much revenue coming from China? And is this really a big risk? Let's answer that first.
Here's the 3 points that we're going to be focusing on today. The first one, as Nick mentioned, chip companies report so much revenue in China. Why is that? And is it a big deal? The second thing, new bull market starting for telecom, internet service providers, and the enterprise market. Do we think that's true? And finally, Ubiquiti 1 year after the last update that Nick did.
Okay. First point, revenue from China. Now, this is taken from Qualcomm's 2023 annual report. We'll have another one of those here before the end of the year because their fiscal year 2024 is going to get reported on here in just a few more weeks. But you can see in fiscal 2023, Qualcomm reported 63% of revenue coming from China. Now, check out the video from last year. We used Samsung as an example to help answer this question. But the reason why Qualcomm reports so much revenue coming from China is because that's where it recognizes the sale of its chipsets when they go to the contract assembler, the manufacturer that assembles pieces together to make something like a smartphone. It's not where the actual device ends up and ultimately gets sold to the user. That's just where Qualcomm sells its chipsets to those third-party assemblers. Something very similar taking place with Broadcom. 32% of their 2023 revenue also derived from China, but exactly the same reason. They recognize a sale when they sell those chipsets to the assembler. So we're going to delve into this industry dynamic a little bit more using the example of Ubiquiti, but we have a little flow chart here to help hopefully clear this up.
Look at this flowchart that Nick created for us to understand how this is not as big a risk as you may think. For starters, you see Qualcomm and Broadcom at the top of this slide. They design the chips, and then third-party manufacturers take that design and actually make those chipsets. Those chipsets go on to Ubiquiti. They purchase the chipsets, and they get those through third-party assemblers, like in China or Vietnam, for example. And Broadcom and Qualcomm report a sale at that point. Finally, that finished chipset product gets sent to a distributor, which is usually outside of the US, and then Ubiquiti reports a sale and relies on data from their distributors to manage their inventory. So, is this something we need to be worried about?
Okay, so this is where it helps to understand the industry and how it operates. So for Qualcomm and Broadcom, we don't think China revenue being so high is a risk. Now, there is geopolitical concern with this, and this is why companies like Qualcomm, Broadcom, and other especially fabless semiconductor companies have been diversifying their contract manufacturers outside of China because of growing geopolitical tensions. But that's not too difficult. Contract manufacturers are kind of a dime a dozen. It just ultimately comes down to primarily two factors: the best assembled production quality at the lowest possible cost, and then the third factor also considering geopolitical tension. So that's ongoing work that Qualcomm and Broadcom can handle. It's a bit different than like maybe when a company like ASML has very, very high China revenue. That's because when ASML sells a piece of its lithography equipment to China, the end user is in China. And so that's a higher risk, geographical revenue risk, because you never know when the US and the Netherlands may say, hey, ASML, you can't sell that equipment anymore.
Nick, you covered this company Ubiquiti back in November 2023, and the stock has been pretty volatile since then. Tell us a little bit more about what's gone on since last year.
Yeah, and we covered this as we were kind of doing our pre 2024 research to figure out what our favorite investments were going to be for this current year. And you can see in this little article that I wrote up, Ubiquiti was at the top of the list. We actually ended up passing on this. There's a company that like kind of monitored for about 5-6 years or so, have always passed on it. You see it's had a nice 60% plus rally since then. You win some, you lose some. We own Skywater, and of course, Shift4 made it into the list as one of our top non-chip stock picks for 2024. But it's time to do a refresh on Ubiquiti in light of the fact that, as Casey alluded to at the outset of this video, we think that the cloud and enterprise computing market is on the cusp of a new bull market. We'll show you some familiar slides if you've been with us for a while to help explain this.
Take a look at this chart that we created from our friends at FinChat. We have total revenue, earnings per share, and free cash flow. You can see that free cash flow took quite a hit in 2023, but it's rebounded significantly back to all-time highs, and earnings per share have also started to rebound as well.
Yeah, that explains why the stock price has had this nice 60% plus rally so far in 2024. We're going to come back to this in just a moment. If you've been around chip stock investor for a couple of years, you'll recognize this rationale that we use explaining Ubiquiti's resurgence here in the last year, similar to when we made our calls on Qualcomm and Applied Materials a couple of years ago. But Casey, let's maybe first explain to the folks at home, what the heck is Ubiquiti? This is not exactly a household name.
No, this was definitely a new company for me. Ubiquiti makes all kinds of internet networking equipment, things like security, access control for doors, cameras, that sort of thing, and cloud gateways like routers. Ubiquiti also makes some hardware for enterprise and local ISP businesses building an internal network. You can see this fiber performance. You don't have fiber cable already, and if you don't want to lay that fiber cable, this hardware can work well for that.
Yeah, so two halves of this business. One much more geared towards consumers and small businesses. That was in the first slide we showed you. The second one geared towards enterprises, internet service providers, especially local service providers. Some really cool stuff. This company does very little, if anything whatsoever, in the way of actual marketing. But they've built a very, very sizable and pretty strong fan base, let's say. The developers that kind of flock to the Ubiquiti suite of products usually have a lot of good things to say, and they're repeat customers, lots of word of mouth that happens within that community of people that are in the business of building connectivity networks.
I think one point that we should mention is the CEO of Ubiquiti, Robert Pera, used to work at Apple as an engineer. And a company that is most similar in business model and structure is Apple, right?
In a way, let's take a look at our semiconductor industry flow chart. So in the semiconductor industry flow, you can see the fabless chip designers like Broadcom and Qualcomm supply chips via their third-party fabs to the third-party assembly companies that Ubiquiti has hired. That's the tech equipment and devices bubble. And then Ubiquiti gets those finished devices they've designed, they've outsourced the manufacturing, they bundle it with some enterprise or consumer software that helps the user manage their network. So, like you said, Casey, Para coming from Apple, really sleek, minimalist looking design of the devices themselves, very tight software integration with those, easy to use interface. So if you have a home network and you're trying to manage devices connected to your network, or if you're a larger ISP managing all of your routers and network devices, big business, trying to manage employee devices, kind of a nice little package that's provided for you, all built in into one. Also some security products that go with this as well. So this is, you could say maybe something like a small business, smaller enterprise cybersecurity play as well.
This episode is sponsored by public.com. Heads up, everybody, time may be running out to lock in a 6.9% yield at public.com.
Right now, bond yields are at their highest levels since 2009. And you can take advantage with a bond account.
With a bond account, you can potentially lock in that 6.9% yield until 2028.
And then when the Fed does lower interest rates, your yield actually remains the same. It's locked in. But you must act fast to take advantage of some of those highest bond yields in years.
Discover how you can lock in a 6.9% yield until 2028. The new bond account only at public.com. Check it out now at public.com/CSI.
Okay, there's a high level look at what Ubiquiti does. Casey, let's talk about the end market. We have this lumped into cloud and enterprise.
Cloud and enterprise also includes end markets like internet service providers, telecoms, IT infrastructure companies, and small business computing needs as well. That's primarily where Ubiquiti plays. And the industry has stabilized, and we're just on the cusp of returning to a new growth cycle. How do we know that that's the case? Let's take a look at these series of slides from Qualcomm. First one, Q1 of fiscal year 2024. Take a note, of the Internet of Things portion of Qualcomm's business. That's where they lump these sales. 1.1 billion Q2 of fiscal year 2024 up to 1.2 billion, and then most recently in Q3 1.4 billion. So obviously there is a trend upticking for these chipsets.
Similar story over at Broadcom as well. So for Broadcom, they call this particular end market broadband. And this is equipment that gets sold to telecoms or internet service providers, perhaps small businesses building out a network, and they need to buy things like routers and switches and so on. Pretty ugly looking numbers in Broadcom's Q3 fiscal 2024, almost 50% year over year decline, also a sequential decline in Q3 from the previous quarter. However, CEO Hock Tan said in their last quarter that they expect broadband to be back in sequential growth mode exiting fiscal 2024, and that will end this October. So in less than a month, Broadcom's fiscal year will be complete. We'll get an update later on at the tail end of this year, and we've been told to expect that segment to return to growth. So that all this ultimately means is sales to companies like Ubiquiti are back on the rise again. There's a picture from Broadcom showing some of the devices that their chips end up in. You see some similar looking pieces of equipment to what we showed you from Ubiquiti earlier, some Wi-Fi devices, some routers for small business and offices. And then over there on the right, you can see some switches, or what Ubiquiti calls a cloud gateway. And that's a device maybe that collects up all of the devices on a network in an office and consolidates all of that traffic onto one single device before the data proceeds to get sent on to the network of the internet service provider that that office is connected to. So sales of things like these are back on the rise after the bear market of 2022 and 2023, the post-pandemic decline for broadband and IoT and networking in general. All right, now let's circle back to that chart Kasey showed you with the free cash flow reaching new all-time highs for Ubiquiti. Explain what happened here, Kasey, with this next slide that now includes inventory levels.
Okay, inventory levels are in purple on this chart. You can see that the inventory peaked mid-2023 and has been tapering off ever since. In tandem with that, as the inventory tapers off, you see free cash flow going up.
So the reason why the inventory peaked about mid-2023 was because we were coming out of the pandemic when everybody was buying all things digital all the time because thought that that was what was going to be for forever. Turns out it wasn't. People emerged from pandemic, they decreased their purchasing of digital equipment, and then suddenly Ubiquiti has this pile up of inventory. So as Kasey was saying, the management of this inventory becomes really important. And if you suddenly end up with a lot of excess inventory, that can be a risk for a business if they're not able to sell it. Because eventually, if the inventory gets out of date, maybe they need to sell it at a heavy discount. Maybe they're not able to sell it at all, and it's just a total loss. However, if the inventory is managed properly,
you can sell that product and it turns into more cash flow.
Exactly what we called out as one of our key reasons we were buying Qualcomm for the last couple of years. They had excess inventory. They figured out how to manage that inventory, got it sold. Free cash flow goes crazy, kind of similar with Applied Materials during that period after the pandemic. Elevated inventory, free cash flow conversion went up. They did a fantastic job managing the sale of their equipment. Something very similar happening with Ubiquiti.
The moral of the story, inventory can be a risk, but it can also have a lot of reward if you manage it correctly. Let's look at the balance sheet for Ubiquiti.
Yeah, this is also a mess. Kind of coinciding with the peak in inventory, you can see Ubiquiti's debt also reaches very high elevated levels at around mid-2023.
So you can see that their debt also peaked mid-2023, but they've been using that free cash flow to pay down the debt, $300 million in the last year alone.
And that's not to say that this issue is now gone. You can see all of this debt is going to come due in 2025 and 2026. In fact, a lot of it, almost all of it, is going to come due in 2026. Interesting little point here, though. Founder and CEO Robert Parrott's almost like they knew how to handle this situation with excess inventory. Okay, they know they have a lot of inventory piling up. They take out some debt to manage their cash flow during this period of time, knowing full well that they're going to be able to push that inventory out and convert it to cash and then get that debt paid off in the coming years. So as long as they're able to continue converting that inventory into cash, this looks like a manageable level of debt for the next 2 years.
Now, Nick, I think at the beginning I mentioned that I didn't know a lot about Ubiquiti. And one of the reasons for that is this right here. This is the shareholder breakdown. You can see that CEO Robert Pera owns 93% of the shares. Now, why is that important, Nick?
He fully controls this business. He founded it when they had an IPO in 2011. He never really relinquished control of Ubiquiti, and
He likes it that way.
he very much likes it that way. Gives a company controlled by a single person like this some ability to do things that other businesses maybe wouldn't be allowed to do. Like, for example, say we're no longer doing conference calls with Wall Street analysts.
It looks like Wall Street has paid Robert Pera and Ubiquiti back a bit by not covering it. I only see one analyst expectation for revenue in upcoming years.
Yeah. And then also in price targets on Ubiquiti stock, we have a total of 3 analysts. The one analyst that has the revenue outlook for 2025 has an outperform rating on Ubiquiti for the next year with a bullish call. The other two, not so hot on Ubiquiti, but not a lot of analysis going into this one. And honestly, I don't think Robert Pera could care one bit.
Nope, it doesn't appear that he does. Now let's take a look at the valuation. So with those minimal expectations and analyst coverage, we don't have a great picture of valuation, but this is what we have so far. On a forward price to earnings basis, we see about 29 to 30x, and then price to earnings around 38, 39x.
Yeah, so the trailing valuation that's already happened. Ubiquiti has reported that the valuation is elevated because they're coming out of a downturn, out of a bear market. So that's to be expected. But this is maybe one of those businesses where if you're looking for a disconnect between what a business's current present reality is and maybe a disconnect with the actual stock price, Ubiquiti could be one of those companies because there's really no analysis taking place on what the expectation is for 2025. Let's say revenue does go up 20%. Will earnings go up dramatically more? It seems like a pretty good assumption to say, yes, they will. Will they go up 20%, 30%, 50%? As you by now know, chip stock investors, at the beginning of a new bull market, you can get some very dramatic increases in profitability metrics, earnings per share, free cash flow per share, whatever it is that you use. So Ubiquiti could actually be quite cheap on a forward-looking basis if you think that this enterprise and networking part of the semiconductor industry is indeed headed for a recovery in 2025. That could mean good things for Ubiquiti. And it would seem that companies like Qualcomm and Broadcom are indicating positive things as of late with their data as well.
So will we be adding Ubiquiti to our small cap stock basket?
I think we've decided at this point we need to continue holding our positions that we have and not making any more changes. But that's just us. And if you want to know why, we have a recent Q&A that we did last week talking about what we're doing in Q4 2024, getting ready for calendar year 2025. We need to raise a little bit of cash in our portfolio, and that probably just means accumulating our savings a little bit. And if there's any underperforming weeds that we need to pull out of the portfolio, we'll do that. So we're not purchasing any Ubiquiti stock again, but we'll continue keeping tabs on this one from time to time.
If you want more information or want to join those live Q&A sessions, check out our Semiconductor Insider membership. You can join via the link in the description below or here on YouTube. Gets you access to those live Q&As as well as all of our show notes and access to our Discord channel where we have all kinds of conversation about all sorts of things. Take care. See you all again soon at Chipstock Investor.